Assalamualaikum warahmatullahi wabarakatuh, and hello everyone. So today our group will be presenting about the small and medium enterprises in Malaysia. So we will be sharing the key insight on how the SMEs are classified in Malaysia, the common financial challenges that they face, and several government initiatives that are available to support and help the SMEs development and growth in Malaysia. So we are presenting this from the perspective of the junior financial advisors at a local consultancy firm that provides financial services for SMEs in Malaysia. So this is our team members. So let me introduce myself first. My name is Muhammad bin JISMI, and my matrix number is 2025 189 687.
Hi, my name is SHABIHAH binti SHAMSUDIN, and my matrix number is 2025 110475.
I am SALSABILA binti MUHAMAD with student ID 2025164675.
Hi, my name is FARIHA binti KARIM, and my student number is 2025394647.
My name is KAMALIA binti AZMI. My matric number is 2025183902.
Okay, firstly, what is the SME? So SME is a business that fall below a certain threshold that set by the government. So SME is typically defined based on the two main criteria. So the first one is the number of full-time employees, and the second one is the annual sales turnover. So this means a business will classify as an SME whether if it falls below a certain number of full-time employees or below a certain amount of sales turnover in a year. So the exact limits will depend based on the sectors itself. So whether it is in the manufacturing sector or services and other sector. So this criteria will help in differentiate between the small and medium businesses from the large corporation. So in Malaysia, the SME Corporation Malaysia, or the SME Corp, is the primary body that is responsible for the SME development and regulation in Malaysia. So SME Corp is operates under the Ministry of Entrepreneur and Cooperative Development (MECD), and SME Corp also responsible for planning and implementing the policies and also programs that support the SMEs growth in Malaysia. Okay, next, based on the recent data, the SMEs in Malaysia contribute around 40% to the Malaysia gross domestic product. So this shows that SMEs contribution to the economy of Malaysia is quite big and significant. So this is because around 97% of all business establishment in Malaysia are SMEs. So this means nearly all businesses in our country are actually consist of small and medium-sized businesses. So making the SMEs as a backbone of the Malaysia's business landscape. And the SMEs in Malaysia also provide more than 48% of the employment in Malaysia. So this indicates that almost half of our workforce is supported by the SMEs. So proving that SMEs are not just important in contribute to the country wealth, but also significant in creating job opportunities to the others.
I want to explain about the criteria used by SME Corporation Malaysia to classify enterprise as SME. For your information, a business will be classified as an SME if it fulfills all the three conditions in regard to the qualifying criteria, type of establishment, and shareholding structure. But today, I just want to explain more about the criteria used by SME Corporation Malaysia. We go through to the details of the qualifying criteria are as follows. Definition by size of operation. Let's begin with the manufacturing sector. As you can see here, a micro enterprise has an annual sales turnover of less than 300,000 or less than 5 full-time employees. Next, a small enterprise records sales turnover from 300,000 to less than 15 million or full-time employees from 5 to less than 75. And a medium enterprise has a sales turnover from 15 million to not exceeding 50 million or full-time employees from 75 to not exceeding 200. Now, let's look at the service and other sector. A micro enterprise is defined the same way, which is sales turnover of less than 300,000 or less than 5 full-time employees. Next, a small enterprise records sales turnover from 300,000 to less than 3 million or full-time employees from 5 to less than 30. While from a medium enterprise has sales turnover from 3 million to not exceeding 20 million or full-time employees from 30 to not exceeding 75. But if a business fulfills either one criterion across the different size of operation, then the smaller size will be applicable. Now, we look at the terms of the qualifying criteria, which are: firstly, sales turnover refer to the total revenue including other incomes. Secondly, full-time employees include all paid workers working for at least 6 hours a day and 20 days a month, or at least 120 hours a month. Full-time workers also include foreign and contract workers. However, the definition excludes working proprietors, active business partners, and unpaid family members or friends who are working in the business and do not receive regular wages. Thirdly, the OR basis of classification. OR basis means that a business will need to satisfy either one of the two criteria used in the definition, whichever is lower. And the last one is the condition for change in SME status. If a business exceeds the threshold set under both criteria for 2 consecutive years based on its financial year or accounting period, then it can no longer be deemed as SME. Similar with a business that it previously large can become an SME if it fulfills the qualifying criteria of SME for 2 consecutive years. Now, why is SME classification so important? The classification of SME play a crucial role in ensuring that the right support reaches the right business. It helps policymakers, financial institutions, and economic planners make informed and impactful decisions. In the policy perspective, firstly, target support programmers. The classification helps the government direct financial aid, grants, tax incentive, and training programmers to the right group, whether it's micro, small, or medium enterprise. For example, micro enterprise may receive special micro grants that will not apply to larger businesses. Secondly, effective policy planning. By categorizing businesses using consistent data, policymakers can design more effective strategies for industrial development and economic growth. Lastly, performance monitoring. SME segmentation allows the government to monitor the progress of business at different levels and identify which group need more support or regulatory changes. We move to financing perspective. Firstly, eligibility for loans and financial assistance. Financial institutions like SME bank or commercial bank use the classification to assess whether a business qualifies for specific loans or financing scheme. Secondly, credit risk assessment. Leaders can evaluate risk more accurately by understanding the size and financial capacity of the business. For instance, a medium-sized enterprise may have a better repayment capacity than a micro enterprise. And the last one is tailored financial product. Bank can design financial package that match the scale and needs of each SME category, such as microfinancing for small trader or largest capital loans for medium manufacturers. That's all. I will pass to the next presenter.
Next, I will talk about 2 common financial management challenges faced by SMEs in Malaysia and how these challenges affect the overall sustainability and growth potential of SMEs. The first challenge is poor cash flow management. Many SMEs struggle to manage their cash inflows and outflow efficiently. This is often due to a lack of proper forecasting, delays in collecting payments from customers, and unplanned spending. Without careful monitoring of cash movement, business may not have enough funds available when needed. As a result, they face limitation in reinvesting back into the business, which slows down expansion. It also damages their relationship with suppliers and financial institutions, as missed or delayed payment create trust issues. In some cases, SMEs are forced to depend on informal loans, which can be risky and unsustainable in the long term. The second challenge is lack of financial literacy and expertise, especially among owners of micro and family-run business. Many of them do not have formal training in financial management. Because of this, they often misinterpret financial data, underprice their product, or fail to plan for tax and long-term growth. This lack of knowledge can lead to serious consequences such as a higher risk of internal fraud or financial abuse. Poor financial decision making also slows down the pace at which the business can grow or scale. On top of that, banks and investors are usually hesitant to support or fund businesses that have weak or unreliable financial records, making it even harder for SMEs to access necessary resources for development. That's all from me. For the next slide, I will pass to the next presenter.
For government incentive or financial assistance scheme aimed at supporting SME development in Malaysia, one of it is the Penjana SME financing. This was launched as a part of the short-term economic recovery plan, which is known as the Penjana in 2020, to assist SME affected by the COVID-19 crisis. It is managed by Bank Negara Malaysia and offered through participating financial institutions. The eligibility criteria. The business must be a Malaysian-owned SME. There are meet SME definition, which is half annual sales turnover and the number of full-time employees. The second point are negatively affected by COVID-19. For example, decline in revenue or disruption of operation. The third point is registered with Suruhanjaya Syarikat Malaysia, known as SSM. The last point is a credit worthy. No history of default, bankruptcy or legal action, past internal bank credit assessment. The application process. The first step is approach any Penjana participating bank. For example, CIMB, Maybank, RHB, and SME Bank. The second step is prepare required documents, for example, SSM, business registration, latest financial statement or bank transaction record, business recovered or restructuring plan. The last one is owner IC and company profile. Third step is submit the application online or via bank branch. Fourth step is undergo credit assessment by the bank. The fifth step is upon approval, sign the financing agreement. The last step is receive funds typically within 2 or 3 weeks of approval. The benefit of initiative. The first point, large loan size up to 500,000 per SME. The second point, low interest or coupon max to 3.5% per annum. The third point, 6-month moratorium relief from repayment in the first 6 months. The fourth point, the flexible repayment term up to 5.5 years total. The lastly, government backed with partial guarantee to reduce bank risk. The limitation of initiative. It is not suitable for startup with no financial records, and banks still apply their own credit risk assessment. Approval not guaranteed, especially if business lack of documentation, and also funds are limited and disbursement depend on availability. Thank you. I will pass to the next presenter.
Thank you, Miza. I am Asma and now I will present about microfinancing scheme. This scheme is mainly administered by agencies like Tekun Nasional, Amanah Ikhtiar Malaysia (AIM), and a few other microcredit institutions. It was designed specifically to support micro-sized businesses, especially those that are just starting out or are operating at a very small scale. Now, let's take a look at the eligibility criteria. Firstly, the applicant must be a Malaysian citizen aged 18 and above. Secondly, they must already own and run a micro enterprise, for example, a food stall, tailoring business, or a home-based operation. Third, the business must be registered either with the Companies Commission of Malaysia (SSM) or the local municipal authority. Also, the business should already be in operation, typically for at least 6 months. This shows that the business is active, consistent, and has potential for sustainability. And finally, the applicant must not have any record of loan default with other agencies. So, how do you apply this scheme? First, visit the official website of Tekun or AIM or go to the nearest branch. Next, fill in the loan application form. Then you will need to submit a few important documents, including your business registration certificate, a copy of your NRIC, and a proof of your business premises, such as recent utility bills. Some applicants may also be asked to attend a short interview or business briefing session. After that, your application will be reviewed. It usually takes around 1 to 2 weeks. Once approved, you will sign an agreement and the funds will be disbursed to you. It's a fairly straightforward and quick process. Now, let's take a look at the key benefits offered by microfinancing scheme. First, easy access to funding. This scheme provides quick access to funds for micro entrepreneurs, especially those who may be rejected by traditional banks. Second, no collateral required. One of the biggest advantages is that you do not need to provide any collateral or guarantor to secure the loan. Third, flexible repayment options. Repayments can be made on a weekly or monthly basis, depending on your cash flow. However, there are a few limitations we should be aware of. The first one is limited financing amount. The financing range from RM1,000 to 50,000 only. This is suitable for small businesses, but not enough for businesses looking to expand on a larger scale. Last but not least, not meant for large SMEs. The scheme is not suitable for medium or large enterprises that require hundreds of thousands in capitals. That's all from me, and now I will pass this presentation to the next presenter.
So as a conclusion, despite the challenges faced by the SMEs, whether it is financial, operational or even technological, the SMEs may strive to remain competitive and well developed with the support of the government initiative and also support from the financial institution. So the empowerment of SMEs in Malaysia is very important because it will enhance the country's business landscape by providing economic solution, needs and also opportunities to the others.
That's all from us. Thank you.